Hi, everybody. How's everyone doing?
Morning, Dale.
Hey,
Early morning, Dale.
Ryan, Kman, Alexander, Sinatra. Also, Thomas, how are you? Your last name sounds familiar to me. You're doing great. Okay, don't exaggerate now. All right. I don't do cartwheels when you're right, and don't go fetal when you're wrong. It's just another trade.
Just another day at the office.
Yeah, easier said than done. I say it while I'm biting every fingernail off. No, I don't bite my fingers. Anyway, so that sideways action in euro wasn't the bottom, and washing out even under some of those fib extensions. Maybe we are going to go take out those lows, 103.5. It's like a 5-year low or so, isn't it, guys?
Yeah.
Okay,
yeah, 2016, I think.
Yeah, there it is. Back, yeah, the end of 16. Here it is. It's actually 103.40. Oh, yeah, that's could be there in 5 minutes. So I don't think there have been very few Euro bulls for a long time. It just reinforces it. And now we should break out the parity talk. You think we're going to parity?
I think there's a greater chance than we had back then.
Okay.
I think there's a greater chance right now than there was 24 hours ago.
That too.
Good morning, guys.
Good morning, Blake.
Morning,
yeah. So I mean that you're going to start hearing that. So a lot of people have been talking about that for years, and they're going to get their, as Blake would say, their birthday present.
Yeah.
So
I scrambled to check out my longs this morning.
Yeah. And finally, I mean, yen having a pretty lousy day, and it's is still tightly correlating with rates. So after that number yesterday, fairly hot number, yen didn't make a new high, and you had a nice little failing rally on the news here.
Yep.
So how now, brown cow?
We said it yesterday, Jade, the reaction. I thought it was a complete overreaction to the number. And that was load of us jumped on the fade in that. Good trade, but come in today and it's all gone the other way.
Yeah. Again,
you can't trust the market for more than 5 minutes at the moment.
You know what? You're right, because yesterday, I did a trade in the S&Ps. So here it was. It was well, let me show it. It was here. So it was just to me, it looked like it cleaned out the stops, and God, there were 100 handles in an hour.
Yeah.
And I thought, okay, we're going to 4,100 this time. And I mean, these multiple 100 handle moves that we're having in the S&Ps that we're getting used to, it's not normal.
Yeah. And the guys in the room, Kman and one of the other guys in the room, made a very good point this morning. The moves in yields, you don't normally get big swings in yields like that. And it's not good. It's not good for investors. They don't want a very volatile bond market. And it's just adding to everything going on at the moment. A lot of volatility. We're here. Some of it makes sense. Some of it doesn't make sense. And you got to be careful with it.
Yeah. Well, the bond pit used to be one of the biggest pits on the floor, guys. And, they're gone. It's all machine. Mainly go the board of trade, and you could, bring a few friends and go bowling there now. So, I saw a guy, and, I don't know what you think of Leon Cooperman. He's done pretty well, but he talks about the market structure, how, the uptick rule not being there, no specialists to, perform their tasks. And so a lot of people really pointing towards market structure and less liquidity, and really just being run by the machines. So
and that increases the flash crash risks that we have, because there's no human to step in and smooth it or draw a line. When the machines are fighting machines to get filled, they just keep going. But this isn't, at the moment we're not looking at cryptos is obviously you can have a case that they're crashing at the moment, but the rest of it, we're not really crashing. We're moving, but we're not crashing.
Yeah, the VIX isn't reflecting in the way it feels to me. The type of decline that we're getting in equities, that the VIX can't break out yet. Maybe it will, but it doesn't have the same, velocity that. Yeah. Although you look at it and it looks like it's on the verge. I think there was a chart of the day with showing the VIX and that it hit resistance. Looks like it could break out. So
and hey Dale, I'm glad you brought that up. That's something that we've been talking about, and it's really interesting that volatility hasn't broken out as stocks continue to grind lower. It's actually been a little baffling to me for the last couple of days.
That means it's orderly.
I guess that's a good way to look at it. It is orderly. So
just one more thing, Blake, and I want you to take over.
Yeah, sure.
I don't know how you could rationalize, even though I did it yesterday because of short, unless you're day trading. But when, we're about to, this is a monthly candle, but we're going to get a weekly close back underneath this megaphone. It's ominous. It's hard to make a good technical case out of that picture, isn't it?
I see. And, I think anything that we see from here are just going to be bounces that you sell into. I want to show you, I'll show you guys something today. Because first of all, Dale, I think you make a great case that the stock market is breaking, and we can just go ahead and look at this chart. Okay. Let me see here. Just give me 1 second. I'm sorry. I realized I have to.
Oh, let me stop sharing.
There you go. Can you guys see?
Yeah.
Okay, you can see the S&P. So everybody knows that chart, right? We've talked about it forever. What you'll notice, if you can see it in the blue, we actually just completed an AB equals CD, equal leg move, right? That's something Chris Weston over at Pepperstone, he brought that up yesterday. I was already looking at the 161% extension Fibonacci ratio extension just from, this is this week's move, by the way, just last week's bounce. Yeah. And I mean, we're there. So I was already looking at that thinking, okay, well, we might get a bounce. And he's like, yeah, we also have that, equal leg move. And I'm like, yeah, we do, don't we? And so we're oversold, especially on an intraday basis. But do I think that the trend is, I'm sorry?
And diverging.
And divergent, yeah. Relative strength is divergent. Do I think that that we have something that might be sustainable here? No. And actually, I just went long the S&P, like really small size. And do you know where my target is, Dale?
4,100.
4070.
Okay.
Not even 4,100. I don't want. Okay. I don't want to try
4080.
to. 4080. You can try to get to 4080 possibly, but 4070, I'm out. If I can even get anywhere close to that, I'm out. So my risk is really close from here. I'm only risking like 40 S&P points. It's a small position, widening the stops, looking for a counter trend move just because we've completed all this technical stuff. But is there any like good reason why I'm long? Can I take a look around and say, oh man, that I definitely feel really good about this? No, there isn't. And, but the one thing I will say, and then I'd love to hear from Stelios and, Kman if he's here, Ryan if he's. I heard Ryan just a moment ago.
You won the next first.
No, I didn't call on you yet. Come on, man, it's not your time. It's not your time.
Raise your hand. Raise your hand first.
I'm still talking.
They teach you that.
I'm still talking.
They were doing that to me in the phone show this morning.
Yeah.
Okay, so no, I one thing I just wanted to say is I'm not a big capitulation person. You know, you guys have heard me, those of you that listen to me every day, or us or me enough, you know, I don't say that word. I've seen capitulation a handful of times in my lifetime. And I'm saying like half a dozen times. I could name a few of them, and I've seen a few of them. And one of them would have been like, we just saw crude do it, you know, when it plunged below zero. That was a capitulation move. This is not a capitulation move on a long-term basis. This is, however, a nice stop run in Bitcoin, because we dropped below those spike lows from 2021. Here, let me get over to the daily chart really quick. We spiked below those lows from 2021, tripped everybody's stop, and below, you know, towards 25K, and then we bounced back. I'm not going to tell you that Bitcoin is ready to rally, but I will say that I think if it does, you have to sell any move back towards 3,500. But I think the risk is, because we triggered some stops, that there might be a near-term relief rally bounce before we see a continued move lower. And like I said, I do not use that capitulation term lightly. And I know some of you are looking at that saying, we capitulated. No, we didn't. Not even close. That just took out some stops. I still think that there is a risk that we see, you know, 20,000, maybe even below that. When Robert Saylor poops the bed, that will be a capitulation. So with that being said, I'm done crying. Yeah, go ahead, Stelios. Let's hear.
No, Michael Saylor, not Robert.
Actually, you're both wrong. It's Popeye the Sailor.
Popeye the Sailor. Okay. So, but what are you guys' thoughts? And good morning, everybody. By the way, good morning.
What do I think? I think we are at the risk of a relief squeeze. I think you're absolutely right about the S&P, but my view is not changing at all. And if you think about it, look at the global situation. We have three big forces: one, rising yields; two, and inflation as well. The whole Russia situation with Ukraine, you know, nobody knows how that's going to evolve. And also you have China locking down in big way. So that's bringing all demand destruction. So the central banks can see this. They know that it's coming. I think their U-turn is coming closer, a lot closer than I was thinking before. But we're not seeing capitulation yet. We're not seeing the proper, like a market crash. I hope we don't see that.
Wait, is that a capitulation?
Luna, yeah, I think that you can call that, 95%.
That is a Ponzi scheme. That's not capitulation. That's a Ponzi scheme. Yeah. There's a difference. This one is not coming back.
Call up the Coinbase chart.
Now that the coin looks like it's going out of business. And
they posted the 500 million loss, right?
Do you know what they said? They said if in a bankruptcy, if you own a coin with Coinbase, you own a coin, it's liable to be liquidated and pay back the shareholders.
You're a creditor, basically.
I have a Coinbase Pro account, and when they said that, I was already in cash anyway, in dollars. I'm not buying any coins in that account. I mean, the whole reason why you buy that, now that's crazy.
You know, it's the same way in banks. So
was that
our deposits are, it's their money.
Yeah, you do have a guarantee though. You have a guarantee from the government, but you don't have that.
F.A.C.E.
Yeah.
They said if it's in any coin, then they have I didn't read the whole release, but
they said they filed to the SEC that every user of Coinbase is an unsecured creditor.
Exactly.
They have no grab on their money at all if they go bust.
So you're last in line, basically. You're last in line if they go bust.
Yep.
Damn, nice. Man. Well, I might be liquidating my Coinbase Pro account, that's for sure. But this is, I mean, look at let's talk about crypto and I don't have to go into Luna, but let's take a look at like Ethereum. I got asked last night, JT in our chat room, he's like, I was going to buy Ethereum at 1800. He might have, he trades, so he might have, but this is a lot of horizontal support, and in Ethereum. I mean, but I think we could see 1400 pretty easily. I don't see us really stopping here. 1400 is the breakout point. But God, it's ugly. What do you guys think about this madness?
Could this be the start of the bubble bursting?
Well, yeah.
That's my fear.
That's the way it feels.
We've talked about it a lot. I mean, look, there are going to be ones that survive, and there are going to be the Microsoft, or not the Microsofts, the Netflix and the Amazon.com and those will survive this, just like the .com bubble. But we are going through .com bubble 2.0. I know we've talked a lot about it for years. It's here, guys and gals. So
the problem we have with cryptos is that so much of the buying has been done through those stable coins, which is supposed to be backed one-to-one with dollars. If they were backed one-to-one with dollars, you have nothing to worry about. But clearly, they're not. So that's what worries the crap out of me.
Ponzi scheme.
It does worry the crap out of me, and I'm not touching them. But having said that, 12K in Bitcoin, I will be buying some just as a short-term punt. Because I think that's a huge level down there. Yeah.
I'd buy some and put some away. I mean, look, I don't think Bitcoin's. I was never in the camp that Bitcoin's going to $1 million. But do I think that Bitcoin is one of those things that you can buy, and if you pick it up at 12,000, will it eventually be at 100K? Like, let's say
I'll do you a deal.
Now, sure.
You guys buy it, and I'll store it in my wallet, and then we'll see where we are.
Yeah, I mean,
I'll look after it for you.
Well, anyway, Bitcoin is gnarly. Now, we haven't heard from Kman this morning. Let's what does the big Kman have to say, especially about this yen move? We've seen dollar yen actually come down to support. Everybody should be, this is our bias chart analysis from yesterday. We were looking at the dollar yen be supported at 128.60. Today's low is 128.40. A little overshoot below that support, but dollar yen seems to trying to be carving out a double top. And let me just move that out of the way so you can see this intraday double top. Kman, what are your thoughts here about everything, life?
About everything, apart from the things you've just been talking about, because I have absolutely no clue about Luna, Bitcoin. I don't know. So on the yen, I think we had a very fierce move lower. I think the yields have been the big story for the yen, and of course now risk is with the equity markets coming off. But this being said, I've started, because I think the yields, the 10-year in particular, this 285 is a decent level, 80-85 in my opinion.
Yeah, that's what you were talking about a few days ago when I thought.
But
I
didn't expect 30 BPs in the 30-year. People must realize that when you are a long-term investor, the big guys I'm talking about, if the 30-year yields or bond market moves by 30 BPs in 2 sessions, it is absolutely huge for their books. So let there be no mistake. It's only half a surprise that we are where we are in the yen crosses, because that is a very big move. So from the highs, same happened in the 10s. They moved like 35 BPs from the highs. For people like Japanese investors, that's a huge move, because they are mostly invested in US bonds via the 10 years. Okay, I heard that they switched over to the 20 years a while back for a small part, because the yield was above the 30s, so they don't have to go into 30-year to have longer term on the books, which I think helped to get the dollar yen where we saw it earlier. So there's been a big correction due to all those yield moves, the stocks coming off. I must say, but it's literally a 10th or an 8th of a position. I've started to buy again dollar yen on this 128.65.
So you do like this level. I mean, obviously you're taking small positions now.
Extremely small, because I don't know where we are going to end up in the next few days. I mean, the market is jittery. We don't really know what the plan is for the next 24 hours, 36 hours. 24 hours into Friday. And add to that a bit of risk off due to Finland, Sweden wanting to join the NATO and Russia coming up. So the euro yen has been smacked down as well. So it's really very, very small, but I've started to reinitiate a little bit of a long leaving room down to at least 127 to add. And so that's it on the yen. I'm not saying the big liquidation or the big correction is over, but I'm starting because in the end, what's going to happen, in my opinion, is we're still going to see QT. If the Bank of Japan persists in not doing anything,
you did say QT, right?
Will remain there, right?
You did say QT, right?
Yeah.
Okay, all right. I just want to make sure I heard you correctly. But you're right, and the Bank of Japan is going to do nothing, right?
The Bank of Japan is? Come again?
Did we just lose him, or did we lose me?
No, I'm here.
Oh, okay. Well, yeah. So you think that eventually, I mean, the dollar yen, I believe that the dollar yen, just technically speaking, I mean, what is your downside here on being on the long side? I mean, your downside might be a couple hundred pips as long as we don't see a massive risk off move. Do you think, and I want to ask you this, Kman, just because of, history. Do you think that the yen can reclaim a safe haven bid? Do you think that that's possible in today's environment?
The yen safe haven is purely based on risk off, right? When everything is going well, you go short a funding currency which costs you zero, and then you invest in risk assets. So a safe haven is going to be the opposite. But is the yen fully in safe haven mode? I don't think so.
I don't think so either.
You know what? The day S&P crashes through 3,400, I'm going to get out of any long dollar yen that I have for the time being, because yields won't matter too much. But as long as we are here, and as long as those especially the longer end of the yield curve holds those levels, I think the downside is going to be limited. But as you say, it can be a couple of 100 points. How much is there to liquidate in Aussie yen, Kiwi yen, you name it, Euro yen, anything that has been built up? Possible.
Yeah.
But pure dollar yen, I think there's a chance that we are going to base in the more medium term. Let's put it that way.
All right. Well, yeah, it's interesting. I don't think that the yen has gone full on, dark risk off bid yet. I mean, yes, it's strengthened a little bit, rightfully so, but and I think that might be partially because of yield. Hey, real quick, last night I was doing a show with Chris Weston, the Pepperstone trade-off, and I just actually tweeted it out because it's something that we do late at night. So when it's released, I'm already asleep, it's because we do it late in the day here in North America, because it's early in Australia, yada, yada, yada. Anyway, we were talking about the euro, and I got a message from one of the guys that I used to trade with. Probably one of the top 5 traders I've ever traded with, had the, pleasure of trading with. He reached out to me yesterday. He's like, "Hey man, what do you think about the euro at the 105 level?" He goes, "Man, it feels like that there's some sovereign bids there, and then if it gives way, it should be a nice breakdown." And I'm like, "Man, if that gives way, it should be, because the euro, I know I've blogged about it over the course of the last couple of, actually I think I did it this week, where I said, it looks like we're going to continue lower. I know a lot of people will argue the euro hasn't really sold off and it's holding up really well. But the flip side of that argument is it's holding its breakdown point too, below 106.30. And with that inflation data so strong yesterday, I think that gave Europe the reason just to, step in and start selling this morning. But I guess the question I need to ask you guys is: are we overdone here? I mean, I picked up the euro because of there's some technical reasons. Which, if you're in the ForexAnalytix room and community, I did. I already, I'm. And by the way, here, just so you guys can see what I'm talking about. This is the ForexAnalytix community, so you can see. I've been awake for an hour, like literally in front of my computer for an hour and a half. I'd roll out of bed, grab my coffee because it's already preset to be made. This is all the chatting that has happened just in the general chat room. I didn't take you to the Flowonomics room and all that other stuff. This is where I said, good morning, everyone, right there today at an hour and a half ago. And you can see how much chatting has gone on just in the last hour and a half in our general chat room. That's not to include the trades room where I tell you why I bought the euro dollar at 104. It's at 104.20 right now. But I guess the point I'm trying to make here is I'm picking up the euro a little bit on the long side down here. I'm wondering if today's move was a bit of a shakeout. What do you guys think about the euro? Should we believe this last move with the dollar, this surge above the 104 level? What are your thoughts here regarding the dollar, the euro, however you want to look at it?
I think we have a chance to go and visit the 103.5. I'm short.
Okay, next. Next answer. I'm just kidding. I'm joking. It's joke. I want to hear what I want to hear, right?
My answer is I don't know, unfortunately.
I was trying to joke with Kman. No, go ahead, Kman. Please explain. He's here.
As the room knows, I've been short most of the time.
You have been, rightfully so.
103.5 is a big level, but I'm trading this one.
Why 103.5? Why are you looking at that level?
Low. This by the time we get there, as we have been seeing over the past sessions, a lot of crap has been already thrown into the market. So, yeah. And we are Friday tomorrow. It's, I don't know. It's not going to be the one-way traffic, is it? It could be, of course. But I'm really now trading the levels on a relatively short term. I wouldn't. I'm not going to stick with it if we go back above 105 or even 104, 60, 65 right now. I'm really trading short term, but I will sell rips because I think the global picture, there's a lot of weight hanging on over the euro, and I think euro is not going to stand up very soon. ECB speakers going more hawkish. Everybody is now aligned for July, but it doesn't matter. Doesn't really matter.
I know they've really become more hawkish this week, really, the lot of the ECB speakers, but it obviously hasn't made a difference. But and thank you for your thoughts, Kman. Let me ask Stell, since he was chiming in, do you think that this is a sustainable euro move lower? I mean, hasn't it acted a little bit better than you thought in the current environment?
You're trying to.
I'm trying to get you guys to jump on board with my idea. Come on, somebody help me out. Throw me a bone for crying out loud.
I don't know is the answer. I really don't. No, I don't know is the answer. I really don't.
Good. I like that answer. All right.
It has gone a bit far, a bit fast, but I really don't know. That's why I don't have position yet. Sorry.
How about you, Ryan? Do you have any thoughts here?
Yeah, we paused at a big level, 105. We've watched that for the last 2 weeks. It couldn't bounce. It couldn't break. It has to do one or the other, and it broke. And we're seeing the fallout from that. The sellers are pushing the break. The news isn't good. As you say, ECB's looking to hike, and the euro's not going higher. It's the same picture for everything else. RBA's looking to hike. Aussie isn't moving higher. So you've got to question what is driving it. And it's not really central banks, not even the Fed, I don't think. So yeah, downside.
You know I was going to say what may drive it is we have producer prices in less than a minute that's coming out. So that's something we should be watching, since CPI data yesterday was a market mover. Obviously, we want to see what producers are doing. So thank you very much, Ryan. I tell you that I am talking my book because I picked up the euro long, but believe me, it's about as small a position as I will take as far as, when I want to take reduced size positions. I'm not aggressive down at these levels because I don't think there's any reason to be. So CPI moved the market yesterday. Do you guys think producer prices will today? We're going to find out. Scream the data if you see it before me.
Where is it?
0.5 on the month.
0.44.
0.44? Really?
What is it? What is
a little
it?
weaker. I didn't see it. So you can see the euro is now bouncing a little bit more aggressively now. That's good. That's good. That's good if you're long the euro. Okay. I'm just playing little cutesies off of these big levels, but I don't, it was a little weaker than expected. Did you guys see that?
It's there or thereabouts. For PPI, it's pretty calm.
Okay.
PPI can be much more volatile than CPI.
Yeah. Okay.
And, lower yields hasn't helped risk in the last few days either. I thought it might take some pressure off. Maybe.
And Dale, I think you got to look at it like, and this is the way I've been kind of viewing it, risk is that that's a risk off, right? It's more of the safe haven bid of the bond market. Right. And that's why yields are coming down. Yields aren't coming down because, for any other reason.
Jim Welsh made a good call, didn't he, at 112? He said buy him at 112, and he was looking for 22. I saw your last interview with him. For bonds. Yeah, he's made a great call. Matter of fact, if you guys don't watch Jim Welsh on Trader Summit, you should. He's, I really enjoy meeting with him every week. But one thing that he's been very adamant about saying over the last several months is, to get bullish on this move lower in the S&P around the 3,900 level for all-time highs. Now, I think that's a big call, especially based on what we see. Technically, it's obviously when you're in a situation like we're in right now, and it's hard to look at a trade like that when you're staring it in the face as it's happening, and just to just say, hey, I'm getting long and I'm looking for all-time highs from here. But that's been his last stance. So we'll see. We'll see if that happens. I want to know if Stell is buying silver here yet.
Yeah. How about you, Stell?
Not yet. Patience is a virtue.
All right. I want you have to tweet it when you do it. So
yeah. I'll put it here. I'll tweet it.
Ping me on Skype. I'm going to coattail you on this one, man.
Hey, so I was going to ask
someone to blame.
Dale, do you have an interview today?
Yeah, one of the best oil analysts out there, Nasser Haji.
Oh, great. Well, then I'm going to pass it over to you a bit. But before I do, I want to say, everybody, hey, if you want to take a test drive inside of the ForexAnalytix community, it only costs $1 to come join us in that really active chat room that I was showing you. Here's our chat room. Here's the Flowonomics room. Here's the trades room. We talk about what positions we're in, what we're trading, and I'll tell you, when you do that, make sure you download the mobile app, and just so you can get all the analysis, all this technology right at your fingertips for $1 a day. Or for $1 for 10 days, just to try it out. All right, because you do get the premium version. All right, guys. Hey, thanks for joining me today. And I'm really upset with Kman and Ryan and Stelios for not jumping on my long euro bandwagon that I was trying so desperately to get you guys to jump on today.
Wheels are coming off your bandwagon, mate.
They are, and I want to congratulate both you, Ryan, and Kman. Stelios, not so much since he's been undecided, but you guys have been really, bullish the dollar, bearish the euro, rightfully so, and really crushing it. So great job, guys. And Dale, thank you as always for being with us.
Okay, buddy.
All right.
So thank you, team. The dream team, everybody. And our star attraction today, Anas Al-Haji. Anas,
good morning. Back. Good morning.
Where are you? Are you here? Are you here in this hemisphere or the other?
Yeah, one? I am in Texas.
Okay. All right. So great to have you. Were you going to share your screen at all to show?
Not at all. I have no slides. Okay. I just want to talk then today.
Let me do it. Okay. So
thank you.
Wow, so much has happened. I mean, last time you and I talked, it was pre-invasion. And I think you said, he might be looking at Kazakhstan. Well, he went
Correct.
right where his troops were pointed towards, and we had that big move to 130. But I know you want to concentrate on a couple of things here, and I did write them down. Initially, you want to talk about will high oil prices cause a recession, and I've heard people say it. One guy interviewed said, anytime the oil prices doubled, there was usually a recession within a year. So let's hear the other side of it.
Well, the other side is everything we know, even in graduate schools, about the role of oil prices in recessions or the economy. I'm talking about economic growth, sorry, not the economy, is wrong.
Okay.
High oil prices on their own do not cause inflation. High oil prices on their own do not cause a recession. We heard the saying that every recession in the United States was preceded by a period of high oil prices, etc. Well, that was made up.
Who made it up?
No, that was made up by various people over the last 50 years.
Okay.
And the reason why, because if you take all those statements, even the guy you interviewed about doubling oil prices,
yeah,
and take that and put any of the macro variables or some of them, and the statement will be true. So saying that every time interest rate and taxes went up and the dollar went up, we have a recession. It's true.
Okay.
So the only way to understand this relationship is this. As oil prices increase, there is an impact on people's pocket. No one is going to question that. But what happened historically is we have a reaction from the government and a reaction from the Fed. And if that reaction is the wrong reaction, we end up with inflation or we end up with a recession or both. If the reaction of the government and the Fed is correct, we have no problem. How I can prove this point? Well, if we go over all those variables in the last 50, 60 years, we can see the data, and the data supports what I just said. If you look at oil prices, for example, and all those macro variables between 2002 and 2008, oil prices continue to go up 30, 40, 50, 60, 80, 100, 120, 147. And we had no problem, even in countries like China and India. Economic growth was going through the roof. Even in Europe, economic growth was going through the roof. So why high oil prices during that period did not affect economic growth? Why it did not cause recession? Why it did not cause inflation? Well, because
the Fed stopped tightening.
Because that was the only period in history where we've seen a major increase in government expenditures, increase in military expenditures, increase in incomes. At the same time, we've seen a decrease in the dollar, decrease in interest rate, and a decrease in taxes. So it's really the Fed policy. At the end is the Fed policy and the government policy. It's fiscal policy and monetary policy that is causing the recessions, while people think what the Big Bang.
It's not oil prices in itself. It's central banks' reaction to higher oil prices
and government policy. So it's fiscal policy and monetary policy. So to conclude this, if you look at the current situation, we have increase in interest rates, and we have increase in oil prices, and we have the dollar near record high or at record high. This is a disaster. This is a recession. The only thing that we got to point at, and this is more kind of a technical / academic statement that I'm going to make, is we have to look at the direction, which means that increase or decrease, and at the same time we have to look at the levels. So the only hole in the argument that I'm talking about right now is that interest rate is still low as a level. But in terms of direction, it is going against what should have been to correct for or mitigate the impact of high oil prices. So we have a threshold.
To me, it looks like, let me just pose this to you. If yields have peaked, and it looks like we have that happening in the 10-year, very big reversal. I'm not saying they're going to crash back to 1%, but they could pull back to 250, 220. What kind of effect is that going to have on, say, for example, we're close to the end, even though the Fed's going to be hiking, that most of it's already in the market. Then what happens? Do we avoid a recession?
Well, the issue is not only the federal fund rates and what comes out of the Fed itself. It is really what the interest rate in the market.
Okay. Well,
because that's where people are going to operate.
These are the interest rates in the market. It's a 10-year yield. So this was a big interest rate increase, and it went, just like, oil, it was a monster move in a short period of time, and it may have peaked for a while.
Okay.
So will this make recession less likely?
All right. Let me just make a little modification to that, because that's really what sometimes, and we've seen this in historically sometimes, where the interest rate charged by banks is different from those key interest rates.
Okay.
Because if I am an oil company, I want to borrow money, I'm not going to borrow at this rate. I'm going to borrow at a higher rate.
Right.
And sometimes there is a gap in between for various reasons, risk among them, depending on the sector and everything else, etc. So the issue is, when we look at the level, we are still below the level where we have kind of bad news. So that's the only hole in the argument that I have. Otherwise, directionally speaking, we are already in a recession, or we are heading for a recession based on that argument.
Okay. You wanted me to ask about the effect of the dollar on oil prices. We have a dollar making new highs. Oil prices have been moving sideways for a few months now, at least a month since a peak.
Okay.
Are we going to revisit these highs in us, you think, or take them out? And can you think of one thing? You see this major support area here at 94 keeps holding. Can you think of anything that would take it back under 94 that you're seeing on the horizon, with all the, different players and what's happening in Ukraine, and what's happening with, maybe Iranian oil? Can you come up with any bearish argument in the oil?
Yes, I can, and I will answer this in a minute, because I just want to refer to this. Since we don't have enough time to explain the relationship between the dollar and oil prices, I would like to refer the listeners to my Twitter account. I have a pinned tweet to a 2-hour space, where I explain all those relationships, and I talk about the currency, including the Russians charging ruble for gas. So I discussed that. So it is the pinned, it's right there, the pinned tweet, the first one.
Right here, this one. It's an interview.
Yes, people can listen to that. It has a lot of details on the relationship between the dollar and oil prices. The bottom line on this is that the dollar is up against all currencies, and oil is priced in dollar. Any way you look at it, oil is priced in dollar. And even those who say, well, look, we have an exchange in Shanghai where the yuan is used to price oil. Well, that is a mirror image of what happens in the dollar trading in Dubai. So no matter what, oil is priced in dollar. The problem is, as the dollar goes up, the cost of importing oil for most of the countries in the world
Yeah, it goes up.
goes up.
Goes up. Yeah.
So if the dollar goes up 10% against their currency, while oil prices in dollars are staying the same, their cost goes up by 10%.
Right.
And if you look at the price of oil in several areas around the world today, it is at record high because of the dollar.
Okay.
So although in dollar it's not at record high, it is in their currencies at record high. And that will have tremendous impact on, because you asked me about a bearish case, that will have tremendous impact on oil demand on one side. And the other side is, if we end up with a recession, and many of the people who participated in our spaces in recent days heard this from me, so I'm repeating things that a lot of people heard me saying before. If we end up with a recession, then oil demand year over year will decline by up to 400,000 barrels a day. So oil demand,
that's a big number.
Global oil demand in 2020, average oil demand in 2022 will be lower than oil demand in 2021 by up to 400,000 barrels a day. Now, some people might argue, well, look, 400,000 is nothing relative to a demand of 100 million. Well, we are talking about a decline here. That means all the growth that we were expecting this year from now on is gone. And therefore, the decline between what was expected and the actual number is over 2 million barrels a day.
Okay, because we pulled all that demand forward.
Correct. So what's going to happen is, that's a bearish case where demand, where oil will go below 94. And based on my view, if oil prices keep declining to below 60, and I'm talking about Brent, then OPEC Plus will start cutting production again.
Okay, so there's your floor. Okay, interesting. I was going to ask you, and something you wanted to cover is, because of Ukraine, Europe wants to shift their suppliers of natural gas to us. And, if you were an arbitrage guy, I mean, for a while we were trading at 4 and Europe's at 20 on that gas, right? So you wanted me to ask if this was a good policy for the U.S. It will be for the natural gas companies. I don't believe it will be for the consumer, because we'll close the gap between prices in Europe and prices here, which is still, even at $7, quite a distance to what Europe's paying.
I mean, you touched on a very important point, because what Europe did, and I think Europe shot itself in the foot in what they've done so far in their reaction to the Ukraine war. All they did is they shifted their dependence from Russia to the US. They've done nothing within Europe.
For security, right.
Okay. That's a big problem. Why? Because Russian gas exports used to come to Europe via pipelines and some LNG, and no disruption. The only disruption they had historically was because of the war in Georgia, and because Ukraine decided to tap into the European supplies when the Russians stopped supplying Ukraine with gas years ago. Beside that, the Russian gas was flowing to Europe through long-term contracts at relatively low prices, and everything is fine. So from energy security point of view, the supplies were secured. Now they shifted to LNG. What that means is immediately the cost went up, and probably forever, because the cost of pipeline of gas pipe or pipe gas from Russia is way lower than LNG. So first thing is increase in cost. The second thing is they moved from something that was steady throughout the year to something that can change seasonally. Why? Because all the US LNG exports is from the Gulf of Mexico, and we are coming into the hurricane season. We know what happened during the hurricane season. So where Europe is going to go for gas if we have a major hurricane like Katrina or Rita or Ivan? So that's a big problem. The other one is, and mark my words for this, we are coming into an election right now, and if gas prices remain above $7, and if they go, especially if they go above $9, we are going to see senators and congressmen calling on the Biden administration to reduce or halt LNG exports to Europe.
Yeah. Huh. Okay.
And they may not succeed, but there will be a lot of pressure on those companies to reduce their exports because the American consumer is paying very high price, and the American consumer is already angry because they are paying for high gasoline prices and now for high gas, and electricity prices are going up. And the price of everything.
One of our attendees has a question for you.
Sure.
Ingmar asks, Ukraine stopped gas transit to Western Europe in Luhansk region today. Can you please comment?
This is, we don't know what the exact story here, because they declared force majeure, which means that there is some technical issues, and they wanted the Russians to divert the shipments to another pipeline, which is an entry pipeline. And the Russians said, well, based on their information, there is nothing there. So there is no reason for it. And therefore, they have to stop exports of gas anyway. So in terms of knowing the story and the right story, until now, we don't know what the right story is. But it was very clear from day one, from the last week of February, that Europe got stuck. Putin, when it comes to energy supplies, he holds all the tickets. Yeah. And at the end, it is who is going to scream first. Yes, Russia and Putin are being hurt in various ways. But the issue is who is going to scream first. Is Europe is going to scream first or Putin? And if you just look at the situation, it is very clear that Europe is going to scream first. Yes, the Russians and Putin are suffering, but can Europe, especially when we talk about democracies here, can Europe handle the shortages of energy supplies, whether gas or electricity? One of the problems, absolutely.
Have you ever seen an oil shock and a food shock simultaneously?
We have one in the 70s, but it's not as bad as this one.
No, this one's on steroids.
Absolutely. And one of the problems we are facing right now.
We had an Arab Spring last time we had this food problem.
Well, here is the Arab Spring was a small exercise for what we are going to see. And the reason why, because in the Arab Spring, there were other issues with it too. Okay. It wasn't only the food prices. Here, we are going to see people who are literally hungry, have not eaten in 2 days. Yeah. That was not the case in the Arab Spring. The Arab Spring, you've seen people with iPhones basically demonstrating in the street. Here, we are talking about
they didn't like the high prices, but now they can't get it at any price.
Correct. So the problem is really worse. The other problem is we already passed the planting season in Ukraine. Yeah. And as you know, Ukraine is a major supplier of various foodstuff to various.
And the U.S. planting season is 50% behind last year.
Absolutely. And if we end up with a drought this summer in places like California and Brazil.
Oh, yeah,
I think we are heading for a major crisis.
Most wars are fought over water resources historically, right?
Yes, but we have another problem, which is we have small, poor, oil-producing countries. If they end up with political turmoil, then we are going to lose their oil. We cannot afford to lose one single barrel today. And imagine if we lose 500,000.
Okay. So was that news blurb about Iran being a couple weeks away from having a nuclear weapon, was that fake news?
I don't know much about it, but we've been hearing from the Iranians for the last 30 years, and they never delivered. So we'll see.
Okay. It seems like things are heating up there as well in the Middle East. So,
well, for Iran, at least, I mean, and it's unfortunate that the Western media is not covering this in details. We have demonstrations in Iran almost on a daily basis, especially in the Arab province, which is along the Gulf. But the media coverage is very weak.
Yeah. All right. So, word of advice to people that are oil aficionados and they trade it. What would you do? How would you advise your clientele about price and opportunities in the oil market for, say, till we talk again?
For midterm and long term, I am very bullish. For short term, we have to be extremely careful because it can go both ways.
Yeah.
But I would like to mention a final point, which is extremely important, that do not buy into the political arguments. And the reason why, because if you look at disruptions in oil supplies in the last 40 years, there are more disruptions in there are more disruptions in democratic countries than countries with dictatorship. So you might make the argument, I'm going to invest in this country because it's politically stable. Well, guess what? What if you have labor strike? What if you have a fire? What if you have a hurricane? What if you have a technical problem? So just be careful.
Okay. Do you think that would relate for mining too? Because I hear a lot of that in mining. Say they have mines in Canada, and they have mines in Africa. That people feel there's more of a tendency to nationalize in Africa than Canada. But Canada during that trucker strike actually went in and froze assets. So
absolutely, that's exactly the point I made. Yes.
Is that it? Is that the metaphor? Because you think it's a stable country, but a dictator that has order in his country, is more of a reliable supplier.
In fact, I usually use this example. For over 30 years, Kadahffi of Libya provided Europe with 1.6 million barrels a day every single day for over 30 years. No one dare even to do anything. The Libyan oil production did not increase, because if we have more freedom, it would have increased. But we never went below that level and never been disrupted. So under dictatorship, and of course, I don't want people to understand that I'm supporting the dictatorship here. I'm just making the point that be careful with the political arguments for investment.
It's good to be king, if just for a while. It's a Tom Petty song. Anyway, thank you, Anas. I always have a great time talking to you. And
you're welcome. May I have just one comment here? People who follow me recently, please, I do tweet in Arabic, and Twitter has a translate function at the bottom of the tweet. So if you just push that translate, you can get it in English. And I tweet a lot of valuable information in Arabic. So don't ignore my account just because I am tweeting in Arabic. Take advantage of the translate function in Twitter.
Yeah, he gives all the good stuff to his brothers. And so they get all the inside scoop. So anyway, Anas, either language, follow him. And thanks for educating our community. And inshallah, buddy.
Inshallah. Thank you very much. And thank you.
All right. Is this a new book you have?
Which one? No,
that's to book you. To
book me for speaking engagements.
Okay, and that you're definitely a pro. So thanks again for giving us some ideas and things to consider. It's almost like the oil world is kind of like espionage, isn't it? Very interesting world.
I never regretted being in it, and there is never a dull moment.
Yeah, and really have the spotlight. And whoever thought that agricultural commentators would have the spotlight to talk about corn and wheat and beans. So we have a lot of new stars. It's a different show than it was 10 years ago, isn't it?
Absolutely. I used to have a friend, I don't know where he is right now, but he got his PhD from OSU, that Oklahoma State, in peanuts.
Yeah.
In the peanuts market. And I was, there was a period of time where I was making fun of him, and all of a sudden he's a star.
Anything that grows, central banks can't do and can't print them. So thank you very much, Anas. Good hunting, and I'll get a hold of you on Twitter later to line things up for this summer.
Sure. Talk to you later.
All right.
Bye.
Everyone, that's a wrap. You could join the ForexAnalytix team in 15 minutes for the morning edge. Remember, don't just count your oil barrels or your natural gas or even the propane on your barbecue. You need to count your blessings. And I'll see everyone tomorrow. Yeah, that's the correct handle. Thank you very much, Alexander. Adios.